Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 top analyst stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we use the TipRanks Analyst Top Stocks page to find 3 different stocks that not only come in with a strong buy consensus from Wall Street, but recent buy ratings from some 5-star analysts. So today we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. Just a reminder that it is a short week this week. The markets are closed on Friday for Good Friday, and to celebrate Easter right now, TipRanks is having a 30% off sale. So if you've been wanting to unlock some great investment research tools, now is the time to do so. Head on over to TipRanks.com to take advantage of the 30% off sale now. Now let's get right into our 3 top analyst stocks. First on the list today, we're taking a look at Gitlab. Their stock trades under the ticker GTLB and is currently priced at $58.55 per share. Over the past year, they have gained 72%, but have cooled off recently in the last few months, falling over 9%. They do currently score a 10 out of 10 on the TipRanks Smart Score, with increased crowd wisdom and increased hedge fund activity. Gitlab is a comprehensive AI-powered DevSecOps platform. They are a single open-source application enabling organizations to deliver better and safer software faster. They offer a location for online code storage and capabilities for issue tracking and CI/CD. They provide end-to-end DevOps capabilities for each stage of the software development lifecycle, and their continuous integration capabilities enable development teams to automate building and testing their code. They have a complete DevOps platform enabling professionals to perform all of their tasks in a project, from project planning and source code management to monitoring and security. Shares of Gitlab have been on the decline this past month following their latest earnings report back at the start of March. They shared their Q4 and full year results. Now, Gitlab did have an earnings and revenue beat for their fourth quarter. However, it was their future guidance that fell a bit short of expectations. For their fourth quarter, they reported earnings per share of 15 cents, which did outpace analysts' expectations by 7 cents per share. And for the fourth quarter, revenue came in at $163.8 million, which grew 33% year over year. For fiscal 2024, total revenue came in at $579.9 million. Now, when we scroll down and look at 2025 outlooks, for the full year, they're anticipating $725 to $731 million in revenue, which is a notable year-over-year increase, but did fall short of expectations. Now, despite that disappointing future outlook, analysts are still feeling optimistic. We just recently heard from one 5-star analyst at TD Cowen. They reiterated their buy rating, saying that GitLab's position is strengthening as a comprehensive DevSecOps platform, and they see a significant long-term growth opportunity. They view recent market dips as favorable opportunities, and management has indicated that previous macroeconomic headwinds have subsided, leading to more normalized purchasing behavior and expansion of their user base. The stock is rated a strong buy based on 19 current analyst ratings, breaking down to 16 buys and 3 holds. Analysts' average price target comes in at $73.35, and that would be an upside potential of over 25% from current prices. Looking at our list of ratings down below, we have a lot in those 20% upside ranges. On the low end, we do have a hold rating here with a downside of 6% and a high-end price target of $85 from Bank of America, which would be an upside of 45%. Next on our list today is a company called Braze. They trade under the ticker BRZE, currently priced just above $50 per share. They've climbed 63% over this past year, but we have another stock here that's cooled down in the last few months, down just over 7%. They currently score an 8 out of 10 on the TipRanks Smart Score. Braze is a cloud-based software specialist. This software-as-a-service firm's customer engagement platform helps its clients automate and analyze their marketing activities with the goal of improving communication channels between consumer and brands. Their main functionalities include data ingestion, classification, personalization, orchestration, and execution. They have operations across the US, UK, Germany, Japan, and Singapore, and boast over 1,700 customers, with some big names amongst them like Burger King, HBO Max, Grubhub, and NASCAR. Braze will actually be reporting their Q4 earnings report today on March 27th after hours, and this does follow an earnings beat in their Q3 back in December. For their Q4, analysts are anticipating a loss per share of 5 cents compared to last year's loss of 14 cents per share. And in the last quarter, they did come in well ahead of analysts' expectations, 8 cents better in fact, so hopefully today we can expect another earnings beat. Looking at the revenue from their third quarter, it grew 33% year over year to $124 million. And they recently passed $500 million of committed annual recurring revenue. In the last few days, ahead of this earnings report, we've had several analysts reiterating their buy ratings on the stock, and that includes one 5-star analyst from D.A. Davidson. They said that after meeting with management, the firm was left feeling incrementally more positive on the company's competitive advantages. Braze is a high-quality franchise that is positioned to display resilient growth in a tough spending environment, and that the recent policy changes being implemented by Google and Yahoo to reduce spam and promote commercial email best practices is a potential demand driver for Braze. The stock currently has 8 analyst ratings coming in with unanimous buys. The average price target comes in at $70.63, which would be an upside potential of 40% from current prices. Down below, we can see all those recent ratings coming in the last few days from 5-star analysts here. Our low-end price target is actually this one here with 22% upside, so not a very low-end price target. And our high-end price target comes from Barclays with an upside of 58%. And third today is Trip.com. Trip.com is a China-based company, so this is an ADR trading under the ticker TCOM, currently priced at $43.42 per share. They've climbed nearly 21% in the last year, including 22% in just the last 3 months. They currently score a 10 out of 10 on the TipRanks Smart Score. Trip.com is an online travel platform offering one-stop shop for worldwide travel. Users can explore travel options, find inspiration for destinations, make informed decisions on the most cost-effective bookings, and share their travel experience. As a holding company, Trip.com operates 4 distinct brands, Trip.com itself, along with Ctrip, Skyscanner, and Qunar, and those brands have established themselves as China's foremost online travel sites. Last year, the company achieved nearly $3 billion in revenue. They shared their fourth quarter and full year results back on February 21st, where they did come out with an earnings beat and some notable revenue growth. For their fourth quarter, they reported earnings per share of 56 cents, coming in well ahead of the 31 cents anticipated by analysts. Their revenue came in at $189 million, and that grew 105% year over year. The company said that their outbound hotel and air reservations both recovered to over 80% of the pre-COVID levels. Just last week, a 4-star analyst from Morgan Stanley reiterated their buy rating on the Trip.com stock. They noted recent growth in China's revenue per available room, which is a positive indicator for the hospitality sector and, by extension, Trip.com. They also saw an increase in business demand post-Chinese New Year, up 27% since last February. They also said that a report indicates Trip.com's outbound business travel is outpacing leisure travel with a growth of approximately 150% year over year, which is a testimony to the company's strong position in the market. With 14 current analyst ratings, Trip.com does come in as a strong buy with 13 buys and just 1 hold. And the average price target of $54.92 would be an upside potential of over 26% from current prices. Down below, looking at our recent ratings, on the low end, we do have our hold rating with an upside of 8.7%, and on the high end, we have a couple price targets up at 38% upside. So that is a quick look at 3 companies, all coming in with a strong buy consensus and buy ratings from some top-rated analysts. Let me know your thoughts on these companies in the comments down below, if they were on your radar or not, and what you think of them. I always appreciate hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock. Please make sure you always do your own research and due diligence and stick to your own investment plan. Don't forget to head over to TipRanks.com to take advantage of that 30% off sale now. Links will be in the description down below. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.